So hey guys, and welcome back to the channel, and today we are back with the monthly update on the 4 Python algorithms I have developed and also shared with you guys through the website. So yeah, we're going to review them as usual and then see what it looks like on the website and talk about some changes that I am making. So of course, as our main strategy, this has been the one that we've deployed for over a year now. It's basically just Zach ranked 2 and 1, seeing if it outperforms the S&P. So again, all these stocks are chosen at the start of the month, and then we gone about looking at the performance. Just so you know how many there were at the start of the month, there were 700. So again, just a huge sample size, and these numbers unlock, and you'll see we had got an absolutely absurd 7.27% return in 1 month, whereas the S&P only did basically 2%. So complete and yeah, just a huge outperformance, right? And yeah, this is probably the most successful month, if I remember correctly. We'll see on the website after anyway. But yeah, what a month it has been for this algorithm, guys. So that's the main algorithm. Let's now look at the other ones, which are newer, and they're kind of thanks to you guys, because the more users we have on the website, the more accurate these strategies can be. So the first one is earnings. So this is basically trying to identify the stocks before earnings that are going to beat their estimates and hopefully go up. Just because the stock beats estimates, that doesn't mean it goes up all the time. Maybe they have bad guidance, or they change their guidance, or there's other bad news. So of course you do have to take that with a grain of salt, but the strategy is here, and it's basically just looking at stocks before earnings that have rank in 1 or 2, so strong buy or buy. And then the most important thing is the EPS percentage. So what analysts are saying about the stock in terms of the percentage chance I will beat, it has to be bigger than 0. And then yeah, we just drop duplicates, because some users, like, they can look at earnings, then another user looks at earnings. If it's the same day, right, you'll get 2 stocks, so you just have to drop them. And this is lagged back by 1 month, so this is for between July and August, whereas the main algorithm does between August and September. So by the way, between July and August, S&P did 2.4 something percent, whereas this month it did 2%. But anyway, this algorithm identified 202 stocks, so you can see some pretty good ones. So NU, Stantec, those are the ones. Johnson & Johnson, Taiwan Semiconductor, so Abbott Laboratories, Interactive Brokers, so a lot of good stocks. And then I identified them before earnings and told us to buy it. And then again, we just evaluate the performance, and this one comes out a way more modest 2.8%, 2.9%. But again, the S&P between July and August, where those stocks were chosen, it only did 2.4%. So slight beat there for the earnings chart. Then going on to the dividend strat, this one is again more of a slow rolling one. The whole goal of this strat is to capitalize on the fact that people tend to before the X date, when you buy the stock that has a dividend, it doesn't always drop by the dividend amount, or if it drops, it will tend to recover. That's what the strategy is basically. And so to do that, the only real filter is just that the stock has to be a strong buy or buy. That's basically betting on it recovering. And then also, we don't really care about yields underneath 2%, as they're too small to get the difference. So again, these are all the stocks identified between July and August again. So Zion is some I know, the rest of these I don't know, to be fair. But yeah, you have the names and all the info you could need. And then again, just evaluate the performance. Again, the S&P for this period was 2.4%, and the dividend strat absolutely blowing that out of the water. That's crazy, because dividend strat is meant to be, a more slow rolling one. The only thing you could say about this is the sample size is tiny compared to the main strategy and the earnings one, which had 200. So that's maybe why we got 4%. But still, it's quite a good amount of stocks, I believe. You can see there is quite a lot of variance. So going to negatives and then really picking up here 0, 1, 2, 3, and then even 4 at the end. So again, huge outperformance there. And then finally, the earnings reversal strat. This strategy is basically based on all the research I've looked at and everyone probably knows about of earnings drift. If a company beats earnings, of course it goes up like straight away, but then over the next few days or next few months, it tends to continue going up. So that's called earnings drift. And so this is what this strategy is trying to capture, basically. And then to note, for those of you guys who didn't watch my last monthly update, all of these strategies were underperforming the S&P except for the main one, because that's gone for a very long time, over a year. So we have a big enough sample size. But yeah, so far, at least the dividend one and the earnings one is recovering, but you'll see when we get to the earnings reversal, 700 stocks. So again, a huge amount of stocks here, very big sample size. I don't know none of the stocks here, but yeah, of the 700, I definitely know them. So yeah, the JMZ Smucker company, apparently GameStop, okay, I didn't see that. But yeah, you can see basically what this data frame is telling you is after earnings on the day of opening, the surprise percentage is if it beat earnings, so we only filter surprises that were positive, and then you basically buy it then, and then you hold it for a month and then sell it, and then again you compare this to the S&P. Again, the S&P for this period was 2.4%, and yeah, the only filter here, we don't even filter the ranks. We buy like strong sales, whatever. We only care about the surprise being positive. And for this one, this is the only strat that underperformed the S&P out of the 4 for this month. So it's unfortunate, 1.17% compared to 2.4%, quite a big difference there. But again, we're capturing basically free money that does not exist in trading, but I guess it's the best way I can put it. Yeah, it's just earnings drift. A company did well. Normally that should be fully priced in, but you can capture 1.17% as you can see. But the market outperformed it, so it doesn't really matter anyway. But now let's look at how this looks on the website. So this is it, Portfolio Central v1.0. You'll see when I update the website, it updates every month. It's going to go to version 1.1 as I've made a tiny change, which will basically lead to a bigger change down the line. But you'll see what I mean. Just so you refresh your mind, this is what the main strategy is. So you can see it's been going for a very long time, and we're currently outperforming by quite a lot. And you see with this 7%, it's going to go crazy. I think this is the biggest month we had. I just want to see, oh, this is the our strategy 6. Oh, wow. Okay, so it's nowhere near the best month we've had. That's crazy. This month is crazy. That's like 16, probably 15%. Wow. Okay. Anyway, and these are the new strategies. Of course, they don't look like charts because, like this one, because it's only been running for a month. But again, the S&P has been destroying these. But again, once we get on a big enough sample size, I'm confident in these strategies. But let's refresh it now. You can see it's been updated to 1.1. Let me log out anyway because it will be undefined. And then, yeah, look at this. Wow. It's just running away from the S&P, a huge cushion now, outperforming by more than 7%, which is really nice. Yeah, 8% basically. Yeah, more than 8% actually. Well, that is beautiful for this long-term strat. If you just look at it on its own, that is a beautiful equity curve, except for this 2-month period drawdown we had, but the S&P had it as well. But yeah, it's absolutely beautiful outperformance there. And then for the dividend strat, you can see that 4% outperformance is not enough to get back on top of the S&P, but we're only like 2% down. So the dividend strat isn't far from recovering. The earnings strat, again, it outperformed, but not by a lot. So this one is still quite far from the S&P. And then the earnings reversal strategy. This strategy has underperformed 2 months running. So we may have to scrap this strategy if we see this over a prolonged period of time. But yeah, that's a monthly update. Again, our 3 newer ones are still underperforming the S&P, but you can see over a long period, I believe these algorithms will outperform like this one. So now I'll talk you through the tiny change I have made, and this was requested, by the way. If you have any feature requests, like, again, if you haven't visited the website, there's plenty of features here. But yeah, this was requested by someone on Trading 212. I make community posts. I have over 100 followers there, so quite cool. Not a flex like this YouTube channel, but still 100 followers. You can't complain about that. So I'm just going to sign in to my test account. This one has, and the update they requested was to the Trading 212 API, by the way. They were a new user and they saw what I did and they were like, wow, okay, this has a lot of potential, and they wanted something more dividends focused. So again, I haven't implemented this. By the way, my internship has just ended, so I'm going on holiday for 2 weeks, and then my uni restarts basically quite soon after that. So I don't know when I will develop it, but the groundwork is in place, is what I'd say about that. But yeah, let me just show you. Again, this is my practice account, by the way. I do not have, yeah, well, we'll wait for this to refresh, but I think 80k my practice account has a return of 45%. Can see the allocation. This is just during testing. No pending transactions. Position heat map looking really good. I just want to see. Nvidia Tesla doing badly in the last day, about the last week. Apple. Apple's been flopping for a long time. Okay, anyway, I'm getting sidetracked. You can see this new tab here, dividends, was not here before. There's nothing here, just dividends coming soon. Also, I'm sure you've noticed, but the video background, which is quite nice and modern, is gone. So I may have to look at fixing that at some point. I think the company that made that video removed it from the internet, as I was just making a request to the MP4 basically, and broadcasting it as a background on my website. But anyway, the grade doesn't look bad anyway for now, and I guess it's less distracting, right? What they want in the dividends, and feel free to comment down below on any features you want, because you can see this connected directly to the Trading 212 API. All of this pulled automatically is great, right? So what they wanted for dividends is sort of a past view of dividends, like all the dividends they've received per year, maybe like a bar chart, and maybe split between the companies, something quite nice visually. And then they also wanted a future dividend look ahead with all the companies they have, and then maybe some sort of drip simulator, like assuming the companies are going to increase their dividends by like 1% every year, something like that, or that the company's value is going to go up by, let's say, 10% per year. So just sort of a forecast of the future, and then also a look back on all your past dividends and how much you made. So looking forward to coding that. Also, I always love coding with the APIs. The API is really nice, by the way. It allows you to do like all of these beautiful things. That's it. That's something to look forward to in the future. But just again, a huge month for all our algorithms. Again, the new ones are still underperforming, but I believe in them. So thanks for watching, and see you next month.